Hey, welcome everyone. Welcome to Stocks Numbers Trading. Thanks everyone for joining. Good morning. It's just after 6:30 a.m. Eastern. It's Monday, June 29. So we are approaching the end of the month, and midweek is going to be a new month, July 1st. And you guys know the first Friday of every month is a NFP, but this Friday is a U.S. bank holiday for Memorial Day. And so NFP is this Thursday. So just mark that on your calendars. We'll go through Forex Factory real quick this morning, but just a reminder that NFP is this Thursday morning at 8:30, and the US banks will be closed on Friday. So just please prepare your trading for this week, for a short trading week and that volatile Thursday with that high impact news, okay? And then next week, when we get back into the markets, we should have regular flowing volume for the month of July. And we'll be moving into an FOMC session where there is some talk about interest rate hikes coming up very, very soon. Okay. So we'll keep an eye on everything. And we'll go through this week's news, and then we'll get into the charts, and we'll look at gold and US30 today. We'll do a top-down analysis and see how everything is moving, okay? So I hope that everybody had a nice weekend. I hope everyone is rested and recharged and ready to go. And let's kick this off. Let's get started with just going over this week's news, and I'll talk more about the NFP we have coming up and if there's any other news, okay? So right now, if you guys are watching, gold is selling off just a little bit. So gold slips as fresh US-Iran strikes boost oil, and the Fed rate hike bets are weighing in. So gold prices eased on Monday as recent US-Iran strikes in the Gulf pushed oil prices higher, while expectations of the US Federal Reserve interest rate hikes further weighed on the non-yielding metal. So spot gold was down almost 1% at 4,061 per ounce as of a little earlier than this session started. So if you are trading gold, just keep an eye on that. Like I say, if you're going to hold any positions over the weekend, any type of news can happen over the weekend regarding Iran and the US, regarding peace talks, regarding maybe there is no peace talks, maybe there's ongoing tension and escalation. There could be news about the Strait of Hormuz opening and closing. We're seeing that, like a pattern of this that's been happening all the time. So we don't have any concrete, solid agreement between these sides. And so you have to be very careful because it can get very volatile. One day it can be the Strait of Hormuz is open, and then the next day it's closed again. And then when it's closed, the next day it opens, and that can create extreme volatility as a trader, where it doesn't necessarily make the best trading conditions. So when you're speculating or you're holding over the weekend, you have to know that things can open up, and they can open up opposite from where you think the markets can be moving, okay? So that's where you got to use proper risk management and know if you're holding over the weekend, what securities you're holding and how much risk you're taking on, okay? Today's news, what we have are the banks in Italy are closed today. And we had some news coming out of Europe, not much, low impact news. And as we're moving into our session here in North America, coming up with Comex and Wall Street opening, we don't have any high impact news. If you are trading later this afternoon at 1:30, you have the ECB President Lagarde will be speaking. And then we go into the Tokyo and the evening sessions, moving into futures market with no big news. So today, just let's treat it as a Monday, coming off of a weekend, with the news coming into the market regarding US and Iran and the Strait of Hormuz and any developments, okay? As we move into Tuesday, tomorrow, Dave will be doing the New York sessions Tuesday, Wednesday, Thursday at 8 a.m. to 10 a.m. in the private Zoom. And then I'll be following up with Dave post session. So we'll be coming in the rest of the week around 11 a.m. Eastern after Dave is all wrapped up the New York sessions. So when we go into Tuesday, guys, again, things start off, you guys know, in Asia, in Tokyo, and then they move into Europe. So if you're trading the European session, make sure you look at any is there any news regarding whatever you're trading? Maybe you're trading the pound, maybe you're trading the euro. If you're trading gold at that time, then look regarding, see if there's any news that can impact whatever you're trading. As we move into more the European session coming into the North American session, then we get started over here. So at 8:30 a.m., this is when like COMEX market opens up at 8:20. There is some Canadian high impact news regarding GDP month over month. But no high impact US news. There's a little bit of US news coming in at 9 a.m. and 9:45 when the markets open. But again, no high impact news. And then we move into 10 a.m. where we get the consumer confidence report and then JOLTS job openings. So whenever we see JOLTS job openings, this is the job openings and labor turnover survey. So anytime I see JOLTS, I know that it's got to be an NFP week, or NFP data will be following this. Okay, so this gets started at Tuesday at 10 a.m. Okay, there's going to be some volatility there. You can see it's a medium impact folder, an orange folder, and some numbers are going to be coming out, some actual numbers. Okay, and then after that, we come in for our post New York session. We don't have much news. And then if you're going to trade again into the Tokyo session, you do have your impact news. Now, when we get to midweek Wednesday, you can see now, look at the date. Now on Wednesday, midweek, it's July 1st. So we're beginning a new month. So even on the Tuesday, the last day of June, you have to consider options expirations. There will be monthly expirations that expire. So that could cause a lot of volatility, okay? And then we start Wednesday, a brand new month. So you have to understand that there's contract rollovers, there's option rollovers, there's all type of things that happen at the month end and going into a new month. So it's not just a normal trading day. You guys have to understand that things can get volatile at the last day of the month going into the new month. So what I would recommend is limit your trading. Just decrease your size as much as possible. Let the new month open up. Let the rollover happen. Let the volatility happen. And then trade as you normally would, okay? Don't go all in, make all bets and go all in on one direction of a move, because the volatility could destroy you as a trader. It could destroy your accounts. There could be some decay in the move. Market makers are known to do this, where they consolidate a lot of securities so that the options can expire worthless, so that they're not moving in a bullish or a bearish direction. And all calls and puts can expire worthless at that time, okay? And then we start a brand new month, July 1st, okay? And you can see it's a busier day regarding news, starting again all the way in the Tokyo session, moving into Europe, and then we come into North American. So on Wednesday, it's an all-day bank holiday here in Canada. We have Canada Day for July 1st, so the Canadian banks will be closed, okay? But nothing regarding the US. US is still open. US will be closed on Friday. And then we move into right over here, 8:15. You have your ADP, non-farm employment change. Wednesday, then you have 8:20 Colmex news. 9 a.m. You have you got Bank of Canada Governor McClem speaks. You have the ECB President Lagarde speaking. You have the Bank of England Governor Bailey speaking. You have the Fed Chairman Warsh is speaking. So at 9 a.m. on Wednesday, it's going to get volatile across the board. You got some pretty big individuals talking in Canada, in Europe, in UK, and US. And the US is a high impact red folder at 9 a.m. We have now the Fed Chairman Warsh speaking. So he's been hinting that there could be some possible rate hikes in the near future. So this is talking about monetary policy. So please be aware of Warsh speaking at 9 a.m. That's 30 minutes prior to Wall Street market opening. And he's due to participate in a panel discussion titled Policy Panel at the ECB Forum on Central Banking in Centra. Okay. And if you don't know who Kevin Warsh is, he's our new Federal Reserve Chairman taking over for Powell. And Continuing, you can read on here why traders care. So as head of the central bank, which controls short-term interest rates, he has more influence over the nation's currency value than any other person. Traders scrutinize his public engagements as they are often used to drop subtle clues regarding future monetary policy. He's already been dropping subtle clues that there's going to be potential rate hikes, and that will dramatically affect the US dollar and any securities that are correlated with the US dollar. And we trade gold, and gold is directly correlated with the US dollar. Okay, and that will be on Wednesday, and it continues as we move into Wall Street and coming out at 10 a.m. Then we got the US ISM manufacturing PMI data will be coming out, the actual numbers. And so that's going to be volatility, okay? And then finally, when we wrap up Wednesday, we move into one of the biggest days of the entire week. It is Thursday, July 2nd. So we normally have the NFP on the Friday of the new month, but US will have a bank holiday, and so they've moved it. You can see right here, 8:30 a.m. on Thursday. We're coming out of all of the European news, and then it moves into the biggest day of the week right here. This is when a lot of traders blow up their accounts and make a lot of unnecessary risk and bets on the job numbers. You have to be very careful here trading this, because it can move thousands of points in a few minutes. And if you're on the wrong end of the trade, it could be very bad for your account. So trade careful. My suggestion is let the news happen and then trade after. Maybe wait 30 minutes, 1 hour, maybe wait for Wall Street market to open. Let the news come through, let the numbers come out, let the volatility go up and down, and see, is it going to trend or is it a choppy NFP, and see how it's moving. Okay, you don't need to trade the first second that they drop these numbers, okay? Because there's going to be a lot of whipsaw action and volatility. So at 8:30 we have our average hourly earnings month over month coming out. We have our non-farm employment change. So here are the numbers. The previous NFP last month, the actual numbers that came out were pretty good, 172,000. They were above the estimates, and it was good for the US dollar. If you saw the last NFP, these were really good numbers, and gold dropped when they released that. Now look at that forecast. It's at 114,000. So it's much lower than last month's actual numbers. So we'll see when they release these numbers that come out. Is it going to be less than 114? Is it going to be higher than 114 but not higher than the last month, 172? Or is it going to be like 200,000? It's going to exceed their forecast and be higher than the previous month, and that would be extremely good for the US dollar, and gold would probably drop even further. Okay, so start to make some scenarios in your head, scenario 1, scenario 2, scenario 3, of what numbers can come out, and try and predict where the market could go. That could help you when they release these numbers, and if the market is moving in your intended direction with the scenario, then might give you the conviction to take the trade in that corresponding correlation. Okay, and then we have our unemployment rate, which is sitting at 4.3% in the US, and that's what their forecast is as well. So you guys know, if the unemployment rate increases, that's not good for the US dollar. If this comes in 4.4, 4.5, that means that unemployment rate is increasing, and that's not good for US dollar. If this comes in lower than 4.3, that's extremely good. That unemployment is going down, and if it's got good job numbers, that could strengthen the US dollar. Okay, so that's all coming out Thursday at 8:30. And then to finish off the week, Friday, July 3, you can see Europe has a little bit of news. And then as we move into North America, US has a bank holiday for July 4th weekend, and it's Memorial Day weekend. So you can click on the folder right over here. US banks will be closed in observance of, sorry, my bad, Independence Day. And it's a usual effect. We have a blog on why US banks are closed, how it can trade. There will be low liquidity, irregular volatility, spreads will be higher on most securities. There will be whipsaw action, and traditionally markets move sideways. I don't think SST will be trading on Friday. We'll be taking a day off. as you guys should be too, but it's completely up to you. So most Forex brokers remain open for every holiday except Christmas and New Year's Day. Stock markets and banks have slightly different holiday schedules. Make sure you look at this schedule for whatever security you're trading, okay? There will be some moves. If you are trading gold, they will still move up and down a little bit, but it's good to take the day off, okay? Especially coming off of a NFP, maybe then take the long weekend, study your journals, study everything, and then next week will be a regular 5-day trading week. After all of this has been announced, then we can probably trade really good volume next week, okay? So that's the schedule for this week. Just some news going on over here. AI jitters meet June's job report as inflation risk looms. So roller coaster stocks face crucial labor data in a holiday shortened week. So what we just went over with Nike earnings and the AI trade in focus. NASDAQ leads stock gains after US and Iran halt their strikes. So that's in the news. Gas prices are falling. That's no guarantee of cooler inflation. Nvidia's AI chip sales in China stall as local chip makers like Huawei take the lead. Oil rises as US and Iran return to peace talks after there was a little bit of a flare up over the weekend. So this is the news going on right now. And guys, we send out in Discord, we send out some trade ideas, trade signals. So we have an indices section where we send out on NASDAQ, on Dow Jones. We have a commodities section where we send out signals on gold and oil. You can see this was from last week. We'll see if we get any signals this morning and the rest of the week. Okay, so we'll keep an eye on that. If you need trade signals, trade ideas, trade management, how to take these things, we do offer these. We also do the live trading as well with those signals. Okay, guys? And there's a free Telegram group. It's pinned at the top of your YouTube channel and gives you all the upcoming YouTube links for this week. Guys, we announced the winner over the weekend. So congratulations to Kolani Fab, who is the winner of the Ultimate Trading Giveaway. So he receives 1 month free of the AI trade ideas and a 1 month plan here at SST with us. And so Kolani Fab, if you're on the call, you can claim your prize. Send us an email and you can claim it, okay? And we'll have another giveaway for the end of this week again. So guys, you have to be clicked on this Telegram channel and you can win prizes. So we want to do giveaways every single week here. And we'll have another one coming up, okay? And guys, if you want to join the team, you're welcome to join the Stock Sniper trading team. Get in the Discord, trade with the community 24 hours a day. Go on the website, study on all the education we have. Join Dave on the private Zoom calls for rest of the week. And get the trade ideas, trade signals, and all the indicators we offer. It's a 50% off promo right now on all the premium plans. You can visit the website and go over that. And guys, the Telegram has before and after of trade ideas, educating you on how we take these trades, and also recaps of Dave trading with the Zoomers in New York sessions, catching some pips and learning together. Okay, guys? So that's a free Telegram channel. It's pinned at the top of YouTube. If you guys can join that, that would be great. And if you want to join the team, come to our website. Here's the link to show you how to get that, claim that 50% off code. Use this code. If it's expired or if it's not working, just give us an email and admin, myself, or Dave will help you out, and we'll get you along, get you all signed up, okay? And then if you want to see all of our education on the website, it's under here. All of our live sessions that we're doing. We're going to keep the same schedule for the entire summer, where we're doing New York right here and post New Yorks, and we'll cover all NFPs and FOMCs throughout the summer, okay? And if you want a free blog, it's available here in our blog session. Here is the one talking about bank holidays and the implications of trading. Maybe you should have a read on this because US banks will be closed this Friday, and it will tell you a little bit more of what you need to know as why it's recommended that take a day off that day and not be trading. Okay, guys? And finally, thanks to everyone on YouTube for subscribing to our channel. Thanks for all of you guys hitting the like button and sharing our channel. We do appreciate it. We're almost at 103,000. We got the silver play button. It's right behind me, right over there. If you guys can see it, it's right beside that Michael Jordan jersey. Right there below that screen I have below me, where we got the play button. So thank you to all of you guys for supporting the channel, and we do appreciate you guys. Okay. So I'm gonna get started. We're gonna get started on gold. Right now, this is how it's moving on the 5 minutes. It's moving. You can see blue, black, blue, black, blue, black. It's consolidating. It could continue to develop where it's making all these higher lows and continue to push up, or it's trending down a little bit where they could definitely push it down. Okay. If you are trading, please use proper risk management. If you're in a trade right now, please monitor it. And if you're not in a trade, I'm not in a trade right now. What I'm going to do is I'm going to do a top-down analysis. So I'm going to start from the top daily and start to bring it down more into the hourly. And then finally, we'll get back to these 5 minutes, but we're going to have levels. We're going to have some points of interest on our charts. We'll have some zones, and then we'll have maybe a better indication of how things are moving and maybe refresh our memory of how things were trading last week. So if you guys are all good, I'm good to go. Please hit the like, subscribe to the channel, and let's get started. Welcome everyone on Zoom. Good morning, guys. Conrad, Justin, Kai, welcome. Bruce, Sonia, Vinay, welcome, guys. I hope you guys had a great weekend and ready to go. And everyone on YouTube from the top, welcome, guys. DEC Volt, welcome. Good morning. Justin, welcome. Aliens Trader, welcome. Thanks for joining. Nikur Brau, welcome, welcome, welcome. Evil Joke, welcome. And I hope you guys are all good and ready to go. And also, guys, just a quick little shout out to the World Cup, to Canada for beating South Africa in a really, really good game yesterday. They're in the first time in the history of Canadian football that they've advanced in the World Cup, and they're now to the final 16 teams. And Canada, I believe, plays the winner of tonight's game between Netherlands and Morocco. So that's awesome. But shout outs to South Africa, okay? Because I was also rooting for South Africa as well. They got a great football squad and a great program there. It was a good game. Canada scored in the 91st minute, like right in the injury time, right at the end of the game. So it was a good game on both sides, and shout outs to South Africa. They played their hearts out, and it was hard to see that game, because I like both teams, but it was fun. But that's soccer now. That's football. When you get to the knockout stages, you got to win, or else you're packing your bags and you're going home. And guys, to the rest of today's games, we got some good games. Brazil and Japan play at 1 p.m. Germany and Paraguay play at 4:30 p.m. Eastern. And in the late game is Netherlands versus Morocco. So we got 3 games tonight, and hopefully your team continues to win, okay? Let's get started. Let's go on the daily on gold, okay? So you guys know, if you've been here with us, you guys are familiar with this chart. And up here, all the way up here, is our all-time high, around 5,600 of gold. So you can see we're nowhere near the all-time high now. We're trading around 4,000. So we're $1,600 away from the all-time high up here. And you can see we hit it back in the end of January, early February of this year. So each successive move coming back up is a lower high, lower high, lower high, lower high, lower high, and potentially some lower highs working this week that can continue to push gold down when we get our NFP actual numbers coming out this Thursday. Okay, we know that if the job numbers are extremely good and higher than the forecast, that's good for the US dollar. Gold could potentially continue to drop. However, gold is building the last few days down in here. So if the job numbers are not as good as we assume, then that might be not as good for the US dollar, and we might see gold continue to rise, okay? So the big move for gold, if anyone's asking, will be Thursday. NFP, okay? And since the all-time high, if we're to look at obvious levels of where we're moving, here is an obvious level that we can all see that there is a clear resistance. So let's have a point of interest right here. Let's draw a line right here. If you also want to draw a zone here, you're more than welcome to draw a zone right here as well. So you can see we are still, there's a zone now, a red block below our all-time high. So the way how I look at this, I know it's kind of silly, but I think whoever sold the all-time high is protecting their position by having a lower high, and now they have a block in the market. So gold has to continue to break above this block in order to get to the all-time high. So for all of those gold traders that are bullish on gold and think it's going to go back to the all-time high, it's wishful thinking. Like you can have a bias, but you still got to break these highs. You still got to get through this consolidation. And when you get through all of that resistance, then you're meeting this block above here. And you've seen multiple times in the past that it's been rejected. So it could definitely come up bullish, get right back up to the block and go right back down. We have to break this block, close above it, and turn it into support, a green block, in order to get back up to this resistance and that high before we can even consider the all-time high. So you got to look at it as there's a lot of resistance. There's a lot of sellers or offers above us, okay? So let's just continue working our way down. Right over here, you can see these wicks, where we've got multiple wicks, we're at this supporting level right over here, around 43.70. So you can see back here, this was a point of interest of support where there was a big liquidity grab. You guys remember trading that day where it opened Monday, like how we're opening up Monday right now. Over the weekend, there was a lot of news coming out of with Iran and US and the Strait of Hormuz. And then Donald Trump tweeted like right now at 7:03 that everything was a-okay, and that wick came up 1,000 points, and then you can see how it produced a double bottom at that yellow line location where those bodies closed, and it held it. But then right there, you see this big black candle, Friday, June 5th. That was a non-farm, that was an NFP. That was our last NFP, and we got a new NFP. So you see, the NFP Friday is what the sellers closed the volume below that level. So this is what I'm saying, guys. NFP is a very, very critical day in trading. And a lot of retail traders take it lightly. They take it as a day to over leverage their accounts. So look at how powerful last month's NFP was. It was the black candle that literally closed below that point of control. And since then, now we can see that the NFP volume has been holding lower highs, lower highs, lower highs, and lower highs. It's got rejections at that yellow line, and that's why gold is continuing to push down, okay? So you can now see that there's a zone there. See the yellow point of interest, 43.70, and then you got a body, a body, a body, and a body. So this is where you can draw your zone right here. See, now there's a red zone in the market right there. See how it came into it, back down. Came into it, there's like a double top, and then there's the drop. So continue with that red zone from last month's NFP and drive it into the future, okay? And then when we're back testing, we can go backwards and see that that zone was green at that particular situation, and we can even go further back and look how it was the all-time high of gold back in October. So you see how this zone or this block is continuing to be impacted by the way how gold moves, depending if the volume closes above or below. See right over here, this was the previous all-time high, the same exact zone. See how I did it right now, and then I show you guys how it's the same zone back in the backwards. So that's why when we're discovering a zone like right now, that's why it's important to stretch it into the future. It's the exact same principle. What I'm trying to illustrate here is that it is a static block in the market, and if the volume closes above, we just change the zone to green to complement it and show that it could be pending buyers buying the pullback, which it did in here. And that's what took us to the all-time high. And then when it came back down, you see that candle, that's what broke. Could have been a very nasty black Black Monday if it closed down there. But then Donald Trump tweeted and said the market was all good. And then that's when we bounced, created the bottom there, and we were trading in between here. It got choppy right through here. But then the NFP last month, Friday, is what took it down, closed it below. It retraced right back up into that block and pushed back down. So let's just continue now analyzing what's going on with this. Here was a pivot right from there when it dropped. There's where it stopped. Let's locate the pivot right there. There was a body close and a body open. Now you can see how this yellow line right here, 4,070, is basically the close of last Friday and the open of today. Okay, you can see how it's a static point of interest. So the buyers of gold they've tried impulse moves above there, but have not closed it above 4,070 as of yet, okay, to make this yellow line support to continue go up. Right now, the sellers are still holding the resistance below it. So we could definitely continue push down. But when we look at the bottom of Wednesday, that's where it bottomed out. We've got a higher low Thursday, a higher low Friday, and we also have a higher low today, but still early with 10 hours to go on today's volume, okay? So what we can do now is start to figure out some more points of interest. So if we come back up, remember, buyers have a job to do. They got to continue to fill today's wick and fill Friday's wick. If they do, then they're going to meet this point of interest right here. This is where the transition happened from Tuesday to Wednesday. So this is what I do. I'm not saying you have to. I place a point of interest at the opening of that bearish body. Okay, and that's 4,110, because if it does continue to come up blue, if they flip this volume, then we know that the buyers have a job to fill those wicks, and then they're going to come right here and meet the opening of this body. And a lot of times when we're scalping the markets, you know, when all candlesticks have the same characteristics, when it comes up to a solid opening body that's very bearish, sometimes it meets it, and then pushes right back down. But this has a small wick, so it could easily break above there, and then we'll see if it will close above. But that's our next resistance level on the daily, is up there, okay? And then we can continue, if I want, to split that black candle in half right around there, but then there's a body and a body, so I would be around right there, 4,160 at the bodies, or if you want to keep that nice midpoint psychological number, you could be around 4,150, right around there. I'm going to keep it right at those bodies because that's where a daily candle closed, and that's where a daily candle opened. Okay, so I do have my resistance above me. Okay, so you can see even how bullish gold needs to be, still needs to get above 4,110, still has resistance at 4,160, and still has resistance before it can even get up there. So it could definitely continue to come back down. Now, Friday was a lot of range, right? It opened. Let's now figure out where Friday opened. It opened right there. So you see today's low of the day is meeting Friday's opening price, right? Exactly. And look at the number, 4,025. So today, there was Friday's close. It was bearish, but it came down there. So that was our weekly low, came back up and closed. And look at what and then the bullish, very bullish, and flipped and came and made a high and closed up here. When we opened right now over the weekend, the Strait of Hormuz news, gold was initially bullish, where we made a high of the day at 4,085. So here's our high of the day so far. And you can see it's a lower high from Friday's high. So then the sellers came in, offers came in, they offered and pushed it right back down to the opening balance of today. And then the sellers came in. You can see it was all black. And when it came back down to the opening price on Friday, where it almost engulfed all that blue volume, the buyers from Friday are protecting their position and coming back in and pushing the market back up to here. So it's still very bearish. The buyers still have a lot of work to do to, flip this entire black candle and get it back up there and then turn it blue. So today is technically still bearish. So at our lowest point of the day, it's lined up perfectly with the opening price of Friday. Okay, so we could definitely come back down and break this and then start coming down black, filling Friday's wick. And then there's where we could find some support right at 4,000 on the dot. And that's where we closed on Wednesday and we opened on Thursday. So I have a yellow line right there at the opening of these candles. And And you can see it's a nice psychological number as well, right at 4,000. If it breaks that, then you're filling the wicks. I'm just going to mark the weekly low of last week right there, because that was 3,960. And then we can go backwards and see, did we find any support from the past right over there? And look at where it is. It's where this double bottom started, and it's representing about 50% of the bullish candle right there. Okay, so one big zone that I would identify is right here. This is what created the double bottom back all the way back over here, all the way back in October. One bottom came back up. There's the neckline. There's the second bottom early November, and that's what took it up right there. Okay, so when I see that now, I can see that there was two equal low wicks right there, representing 50% exactly the point of control of October 6th, Monday's bullish candle. So what I would do is this, draw a zone right there. Okay, if you guys want to copy me exactly, please do. Okay, look at it. This is a big bullish ignited engulfed candle. Okay, look at the date of it. It's a Monday opening up after a weekend. So, you know, Mondays and Fridays are traditionally set up days. And you can see now how the block held when it came back down. There's the double bottom and there's your liquidity grab. That's the A+ setup. If you find this type of setup, screenshot this, and this is a good high probable setup on any time frame. I love finding this on 5 minutes because it's basically a guaranteed move. If it comes down one bottom, you see there's the second bottom and you see a liquidity grab, you can have a high probability it's going to be bullish when it breaks out of here. And you can see how it works on a daily. Okay, so you see that zone. Now what I'm doing is I'm stretching it to meet today. I'm stretching it all the way into the future. Okay, here's today's trading, but there's that same block right below there. So if it fills those wicks and breaks last week's low and it comes down there, it's coming right into that block. That could be where we find the weekly support or the weekly buyers that could hold gold from really breaking down, would be this block. If this block cannot hold, then gold is going to continue to break down, and then you got to start to dissect how low it could go. You could catch that liquidity wick because that was the only thing that saved it right there at 3,885. Okay, so that's where we could move this entire week with the big NFP news coming in. Okay, so what is the trend on gold on the daily? It is clearly bearish. Okay, if we look from the all-time high from up here, it's clearly bearish. All right, but it's bullish if we look from the previous months and how it's been coming up. Now the last few days is where it found a little bit of a bottom, because we have a bottom, we have a higher low and a higher low, and we got some blue volume printing. Right now we are kind of trading sideways with Friday's and today's volume, where it's blue and coming down black. So we could consolidate in here for the next few hours, next few days, and just flag in here until we get that big NFP news, and it could drive gold up or down, literally, with the news. So again, if it's good job numbers, great job numbers, that could be bearish for gold. Then maybe we see gold come back down, close below there, and then we could see it maybe filling those wicks and coming down, continuing to get down. If the job numbers are disappointing and not as good, that could be bad for the US dollar, and then we could see gold maybe breaking back up here, making a new high, maybe close above, retrace back down in here, and then start to make its way back up to there. So that could be this week's direction, right? But the news will be the catalyst of NFP to really drive it. So this week, today, Tuesday, Wednesday, leading into it could be accumulation. It could be just buyers and sellers accumulating, speculating what the jobs numbers could be, and if they're correct, they could break it out. Okay, so right now we have a bearish day. Let's go into the hourly. Let's see when did all this bear volume come in? At what time of the day? So this is how it looks gold on the hourly. You can see it's clearly bearish, making a lower low, coming back up, lower high, new big lower low, coming back up, lower high. But when it came down here, this leg, we have no new lower lows printing. We have now higher lows on the hourly. So now it's building a little bit of bullish momentum coming in there. Again, a lower high coming back down, still building higher lows right here. So technically the hourly is building, but it's still bearish from a higher time frame. Okay, so now let's go more into the last few hours of trading. It got very choppy here on Sunday at market open, and if you were trading here, the futures market, like leading into 9 p.m., 10 p.m., 11, midnight, it was very choppy, but we had a big bearish hourly candle come down at midnight. It continued at 1 a.m. all the way down there, came back up, closed, bullish pin bar. Then we moved into 2 a.m. Here's London, 3 a.m. There's a little bit of an hourly block now. You can see right here. Here's where an hourly candle closed at 2 a.m. Here was London, opened, made a high, made a low, and closed exactly right there. And then look at the hourly open right there. So here's where you can have an hourly red block right there. You see what I'm doing? I'm using my yellow daily line as the reference point, and then I'm coming right down to where there's a body and a body and a body. So if I stretch that, even if the hourly bullish candles come up there, like if it comes up today all the way back up there, I still have to recognize that it got rejected there in London, in the London market open throughout pre-London, London, and post-London. It came in there and the sellers of gold were there. So if it comes back in there, it could be a double top and drop, continue to come back down. If it can close above there, see, I have a wick, a wick, a wick. Maybe it can break out, close above there, and it's not a fake out, it's an actual blue close. Then if it pulls back into here, London, that could be a London block of support. We turn it green to take us back up to the high of the day and maybe drive up to there, okay? But right now, that block is above us, and you can see it was established pre-London, 2 a.m., London, 3 a.m., and post-London at 4 a.m. So that block is still in the market. And now we have an hourly resistance above us right here at 4,047, right at 4,050. There's where the 4 a.m. candle closed, big bearish candle. There was the 5 a.m. open. So I'm drawing a white line right there. And that's to show me where my hourly resistance is just below the block. So even here, if you're buying gold, you still have to get up to and test right here, 4,047, the open of that big bearish candle. Again, same thing can happen. It can come right up there and get rejected back down. It could do what this candle did, impulse break and close below, right? Or it could close blue above, retest this, and then it could have a high probability of backfilling that wick and then driving right up to that red zone, okay? And then when we look where we're trading at right now, we built some good support right here. So it came down, it broke that daily point of interest, hourly candle closed down there. And right here when it opened, it did not continue to break that wick. Buyers came up and closed, and look at where it retested, the yellow line. So when I'm looking at an hourly support level, again, I'm concentrating on my daily points of interest, the yellow lines, and you can see right there is where it came back up. So I'm drawing a zone here on the hourly. So you see how I have a red block above me and a green block below me. So it's showing me where the hourly resistance is and where the hourly support is, okay? And again, if it breaks below today's lowest point, comes down bearish, there's an hourly support right here at 4,008, 4,011. Where do we want to go with? Do we want to go more with the resistance right over here, where it was resistance, came back down? See the hourly candles? Close, open, close, open, close, open, retest, retest. I would go like right around there with a solid line. You could be right there, or you could be right down there, okay? I'm going to keep it right there. Why? Because there's more bodies that opened and closed exactly right here at 4,012. So if we break, it could come down there, find a higher low support at 4,012 without coming into the block, okay? Now, when I look more at the hourly candles, how they're trading, now when we want to scalp the 5 minutes, if I just cut this black volume in half, right? Let's use our Fibonacci tool just to cut it in half exactly right there. So I'm going from the opening price to the closing price. I know exactly where the 0.5 is. It's right there. And then now I can see when we came up right now at 6 a.m., look at where we're having trouble breaking above. Right at the 50% of that black candle, they've rejected it back down. We just opened up now, it came up blue, 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 but didn't even fill that wick and continued to come back down. So we are consolidating right exactly in here now. If you want to trap this volume, you're more than happy to. You're more than welcome to. And this is how gold is trading right now. It's trading black, blue, and black. So we know it's not just going to continue to trade in here all day, right? The sellers could definitely continue to break, fill those wicks, break the low. Could be a liquidity grab down there and come right back up. However, if it closes below there, it could retest this or retest this and continue to drop, right? If the buyers, which they're doing, higher low, higher low, higher low since the lowest point of the day, if they continue to build, they got to break out, fill that high, fill that wick, maybe close above there, retest this, and then maybe they have enough volume to get up to the opening of there, maybe to backfill that wick over there. Otherwise, we're just going to maybe continue trading in this range with some false breakouts on the 5 minutes. So when I go into the 5 minutes now, into the fives, this is what we got going on. So this is more so that hourly green block all the way down here. Here's that hourly red block above here. This is where we are now consolidating on the hourly, and then these are our points above us. Okay. If this white line is too close to where we're trading, right, you can get rid of it, and maybe we can just look at the 5 minute price action. But what it's building is right at the lowest point of the day. So this is horrific trading volume where if you're trading this, okay, but 5 minutes are either going to break out or break down. Okay. So right now this is difficult to trade this volume. It's even difficult to interpret the direction where it could go. So we would have to wait for a little bit more action. Maybe we got to wait for 8 a.m. to come into the market, a new hourly candle. Definitely at 8:20 is COMEX market open, could increase the volume coming in. And then at 8:30, normally we have US high impact news. Today we don't. So we just either have to continue trading with the trend as much as we can. If we're looking to counter the trend, then we need some confirmations. We can't just guess, right? We got to wait for this volume to do something. Okay, and if we want to add some indicators on our chart, this green line is the 9 EMA. We are below it currently. And then if we add the 200 EMA, it's this purple line up here. So we are below that as well. So it's telling me the volume is bearish. It's below the 9, below the 200. And if we add our SST daily bar indicator on the 1 hour, it's showing some bearish volume. And this hourly candle is going to close in 40 minutes. Okay, so it's still early in the hourly. It's only 7:20 right now. And we can continue to watch this. Okay. Any questions, guys? Do you guys understand the analysis? Does that help maybe understanding the direction where we're moving right now, how we're moving? Sadat, welcome. Good morning. Welcome. Welcome. And if you want to trade this, right, guys, you can, but just measure so you know what you're scalping. Like I would measure the entire zone from the bottom up to here. So it's an 80 pip like range where it's trading. See, like that's 80 pips coming up. And if it goes down, 80 pips going down, coming back up. So you're in an 80 pip range. If you're scalping this, yeah, you have a potential to make 20 pips, 30 pips, 40, 50 around there. But for the most part, it's just it's difficult to trade this. Like I don't know, a lot of you guys are trading individual candles where you could just be selling that and you're in and out, or buying that, and I don't think you guys are doing that, okay? Unless you're just individual scalping these bars. So let's just continue to wait it out. Please stop spamming, okay? Please stop spamming. Okay, I kind of get frustrated with the spamming, but I'm not going to let it get to me. So this is going to affect the guys on YouTube, not me. Okay, so I'm going to let you guys on YouTube, you deal with this. You tell the spammer to either stop or continue doing what they're doing. I won't be able to read any of your guys' messages, and I don't think you guys can read anything else. Okay, So I'll let you guys deal with the spammer so you guys know what I go through on a daily basis. Okay, we got a signal over here on gold. If we go to the Discord, right over here, guys, we can take a look here. So this came out just right now. So at 720, looking to short gold below 4,036. Okay, so we'll mark that on our charts, 4,036, which is in the consolidated zone, like right here. Okay. Where we can continue to watch this, okay? I'm not in, so I haven't taken it, but I can continue to watch it, right? So I'll write right here, there's an SST sell, the Discord sell signal. Okay, so what we got to watch now is the sellers. Will they take out that lowest point of the day right there, that purple line, 4,025, or is it going to produce a higher low because the sellers are coming back down, targeting these wicks? So there is some redistribution of the volume. So that bearish candle did in fact close below that hourly consolidated zone. Okay. So even if it comes up blue, 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 look at it could meet 50% of that black candle and be the bottom of that hourly consolidated zone and maybe target the lowest point of the day right there. So right now it's very bullish coming back in. So that's what we got to watch for, that rejection right there. And we're going to see now on the short time frames to see if the buyers can hold up the price from preventing it from breaking a new low of the day. Okay. So a lot of trading is analyzing, guys, believe it or not. I know maybe it might not be familiar to a lot of you guys because you guys just buy and sell everything and don't analyze anything. So it might be new to you. But for most traders, they analyze right now. They're analyzing to see, is gold going to break the low of the day? And if it does, is it going to be a liquidity grab? Like, will it be a big wick coming back up? Or will it actually, in fact, close below and continue to drop further down? So whether you're analyzing the market or you're trading it, okay, there is some traders that just analyze to see for clues what could happen down here and maybe give direction as to how it could move in the next little bit, looking for a trade, okay? So if I'm not trading this right now, it doesn't mean that I'm not looking to take a trade. It's just I'm waiting to see what will happen down here, to see if there's a clue, right? And some of you guys will start to understand this, that sometimes in trading, you just got to sit on the sidelines and continue to focus as to what's going on. I got my eyes on the candle. I'm still watching. Just because I'm not in a trade, an active trade, does not mean I'm not looking to take a trade or I'm not watching what's going on here. Okay. And this is where it looks like it could be forming a double bottom, right? Nothing is formed or guaranteed, but I can see maybe if this is where the bottom was formed, it came back up. There's what our neckline, we have to break the hourly resistance. It's coming back down this leg. So anywhere around here could be a potential double bottom, right? And then we want to see it break through there. However, this is where I'm saying we could see a nice clue. Like if it's trying to hold right here, the bottom leg, now we got to watch for liquidity grab, or will it actually close below here? So coming down here, will it just break, grab liquidity, come back up? Or will it actually close below here? And then we flip this, and then it will continue to be bearish. Then we have a better hourly white line here. If I could buy here or here, I would definitely like to buy at the white line at 4,012 because that's hourly support. This is the daily low so far, and the volume is still coming down. And if you're looking for a 5-minute like a move, when we're looking between the purple and the white line, see that big bullish candle that printed right there, Friday at 220? That was a structural candle that closed all above here. We have a wick, a wick, a wick, a wick. And if I was just to come down to about where those 5-minute bodies are, you can see kind of almost 50% of that blue candle. That 4,016 to 12, that could be the zone right there, where it could show us where the buyers are if it does break down, in fact, down there. Okay, so right now it's coming back up. Higher low, it didn't come back in and fill that wick so far. So it could come right back into this zone and continue to trade in that hourly zone. And then it's right back blue inside here again. So then it could be just doing this, blue, black, right back inside this box again. And that could be showing us that there is a little bit of a second bottom. Okay. Let's wait for this candle to close in the next 20 seconds. And we're moving into 7:30. So a new 30-minute candle is going to open as well. Am I in FOMO? No FOMO here. I'm not even in a trade. So why would I be FOMOing if I'm not even in a trade? Analyzing. I'm doing analysis. Maybe you're in a FOMO trade. Oh, it's not for me. It's for the other guy. Okay, sorry. It's hard for me because when I just see a message, right, I'm reading what you're saying. I don't know if you're directing it to me or anyone else. Okay, my apologies. That's what I mean. When someone spams a chat, I have no idea what you're saying. Then I just read the next sentence, and then it says, are you in a FOMO trade? And that's what I read. To all of those traders, streamers out there that are inspired to open up a YouTube channel and showcase your skills live, good luck is what I'm going to say. Good luck, guys. It's not easy to trade, analyze, entertain chat, read chats, read a Zoom, read a YouTube, read a Discord, read or order flow, stay focused on these low time frame candles, and do what we do here. It's not easy. And I hope that you guys get to try and see what we go through. Okay, look at that big bullish return coming back up. So is this in fact the double bottom where I just showed you? Came down, the neckline is right there. Second bottom, kind of right there. So we see it did not take out the lowest point of the day. Now it's coming back up. Okay, it's not complete. I don't see a blue candle closing above there yet, but maybe this could be the first bar that closes above. Could be an impulse breakout. Look at how the hourly candle now has flipped into a bullish pin bar. But we're still trading in this hourly consolidated zone, right? If we look at the hourly, we're still inside here, okay? It's a new 30-minute candle that has just opened, and it's returned bullish, okay? But we got to watch where it closes. It came all the way up there, and it's getting rejected back down again. I can showcase a little bit of news over here on our charts. If we see anything, if we need news, we got financial juice right over here. Pablo, Trump has spoken. What did Mr. Trump say right now? Iran has requested a meeting. It will take place tomorrow in Doha. Okay. So that could that be the reasoning behind that candle? It could be. It could just be, this is just 30-minute volume opening up, right? But it's still in this consolidated area. It's a nice candle. showing bullish momentum, but when it came up there, it's getting rejected again. Okay, so they're maybe pushing it right back down and then could continue to come down and test and break today's lowest point of the day. It's so much easier to trade trending volume than to trade this. I know how it is. I do trade the markets, guys. No entries yet. Not for myself, at least. Maybe you guys have some entries. I do not yet. Mitchell, what's the biggest obstacle I've had to overcome to become the trader I am? It's not trading this stuff. That's what it is, guys. I know it sounds like an answer you don't want to hear, but it's this. I used to just trade inside here and get frustrated trading this, be on a sell, be on a buy, make some losses in here, get upset, revenge trade, over leverage, and before I knew it, my day was over and the good volume didn't even start to trade. So now why I'm a better trader today than what I was before is I don't trade this garbage. I wait for I watch to see, is it building? Will it close above here? Will it grab liquidity? I'm more patient now than I was before. I now use my proper risk management. Before I didn't. Before I would just gamble, right? I would use any size, anytime. Now I use a certain percentage every single day. And if I lose that, I'm done trading for the day. It's just being more disciplined. I know it's not the answer you probably want to hear. It's probably what every trader says. You got to be patient, you got to be disciplined, but it's the truth. It is the absolute truth. You have to be very selective with your trading. Some of you guys on YouTube are saying, Ron, why are you not buying? Why are you not selling? Why are you not in a trade? Why this? Why that? Because that's the reason. It's still just consolidating here. Yeah, it moved down, but then it came right back up. But we're still right where it started. So whether you were in a sell or in a buy, if you're still holding your position, it's gone nowhere. Unless you scalp that move down and you bought that move up and you've already taken your profit out, that's a different story. But I don't think all of you guys are just have that scalper's mindset like that. So a lot of you guys are still holding in here. Whether you're selling, you're still holding. Whether you're in a buy, you're still holding. And it's still stuck in this hourly range. Silent trader, Ron, since you're from Canada, I want to know your point of view of the certain trader Danvo. Do such methods considered too risky? His method of his stop loss is so much different. I can't speak for another trader. I don't know. He can speak for himself, but if you're talking about a stop loss, that's risk management. I show you guys where I place my stop loss. I'm sure he shows where he places his stop loss. He might be risking more or less. I don't know. That's his personal risk management. You're going to have to ask him that question. I can't speak for others. I can only speak for myself, how I trade. I'm not here to talk about other traders. That's not what I'm here for. I'm sure he has a strategy or a method to his trading, just like I do, just like you do. Everyone trades different, okay? All you know from Tomvo is a pineapple. I have no idea what you're talking about. I don't even know what I put pineapple. Yeah, I love eating pineapple. I love pineapple on my pizza. That's about the only pineapple I know about. I'm gonna go to Jamaica in the next couple of weeks. There's gonna be a lot of pineapples there and mangoes there. I know about that. Oh yeah, on pizza, it's the best. I used to think it was gross on a pizza too until I actually had it. And on a spicy pizza, like when you get a nice hot peppers and you get that spice and then you get that pineapple and you get that sweet flavor, it's nice. Believe me, I was against it too. until until I tasted it. Pineapple on pizza, never go to Italy. Alex, I'll be smoking with the Rastas? Probably. You'll find my footprints on the beach, going to where the Rastas are smoking and eating the jerk chicken. But I gotta cover my foot tracks so my kids don't find me where I'm going over there. I know from footprint charts. See, you can learn something from trading and learn something in real life. Oh, the Jamaican beef patties, Justin. Oh man, they're so good. Weed on pizza? Ah, I don't know about that. Maybe, who knows? You gotta try it once. Okay, so look at the volume, guys. We are literally still in this hourly consolidated range. So we got to continue to be patient. If you want to take a trade in here, you're welcome to, but just understand it's still in a range. Okay. It came close to taking out the lowest point of the day, but the buyers came in and saved it so far, and it's still building and barcoding in here where we're going blue, black, and blue. Guys, we saw a movie yesterday with the kids, Toy Story 5. If you guys watched it, we saw that yesterday. July 1st, another good one is coming out, the Minions. Okay, to all the movie buffs out there with kids, just telling you what's coming up. Toy Story was good. We got the Minions coming up. Spider-Man, my son can't wait for that one. The new Spider-Man's coming out. And the movie I can't wait for is coming out, I believe, in August, the Fast and Furious. If you guys remember the original Fast and the Furious, I think they've got like 15 episodes now, 15 movies since then, but the original one was the best one. With Vin Diesel, Paul Walker. Toretto! We'll take a look at US30 as well today, guys. We'll look at the Dow, okay? We'll get closer to the Dow when we start to move into 9 a.m. Maybe we might find some volume trading better than gold. Gold is not doing much right now. Tammy, your sister made fun of you for liking the Fast and Furious movies. The first one was the best one, and then the part two was okay. But then when they started getting into 3, 4, 5, 6, I think there's like 12 of them now. Then it started to get really, it was too much, and they weren't good anymore. But I believe the first one, and then the second one was Tokyo Drift. After that, I didn't even follow the rest of them. They got too much. Uh, so we'll see the one that's coming out now. Have I ever done trading and driving? I don't know if I want to say that live, but yes, I've been known to scalp and drive. it's I'll I don't know if I should be saying that, but yes, I've been known to scalp and drive. I've been known to do everything while I'm scalping. I go to the grocery store. I'm on the 1 minute candles. I got my phone right in front of me. If I see a setup, I take it, right? If I'm at a drive through, my phone is in front of me. It's on the 1 minutes. If I see what I'm looking for, I'm in and out. Pip and dip. But you got to understand, I'm pipping and dipping. Maybe 1 or 2 candles, I'm in and out for 20, 30, 40, 50 pips. I'm not sitting there holding the trade to look for a trade to come back to the all-time high of gold, right? It's just like trading one, like if you look on the 1 minutes, this consolidated range, right? I'm not saying I would do this, but there's a nice big bullish candle that started right at 729. Look, it retraced right into 50%. It held. Let's say I bought this candle at 731. That's it. That's all I'm looking for. And I know that that candle is minimum 10 to 20 pips. Look at it. It's coming up, coming up. It's actually a 40 pip 1 minute candle. You could have pipped and dipped right out of that, right? If I was in the drive-thru at Tim Hortons waiting for a coffee, boom, nail that. You're out. That's all you're looking for is scalping. What's that? Nizran, my nephew's is Montenegrin. He says that you and him are neighbors by countries. Are you really from Albania originally? Yes, I'm Albanian. My parents were born and raised in Macedonia, so but Albanian origin. Grocery scalp, yes, yep, yep. You got to have a lot of experience to do that. I don't recommend it if you're new. Like yesterday at the movies with the kids watching Toy Story. There was a part of the movie I'm don't my kids are not here, but it got really boring in the movie. So I took my phone out, discreetly, looking at the 1 minute time frames. When the market opened, we were at the movie at 7:20 p.m. Eastern, and you guys know at that time, 6 p.m. the market's open, 7 p.m., 8 p.m. they're moving. I found a couple 1 minute scalps on gold that paid for the movie tickets, paid for the popcorn, paid for the drinks, paid for the day, paid for the movies, right? The kids, I had to hide it from them because my daughter watches me. She's like, stop scalping. She's like, put the phone away. We're at the movies. So she's on to me. Justin, you do the same thing at the movies? Yeah, like it's what do you want me to tell you? I can't lie, guys. I like to scalp the markets wherever I am, wherever I am. If I'm with you guys at it, like if we go to a restaurant, if we go to out for lunch, you'll probably see me pull out my phone and it's got the alerts waiting. And if there's an opportunity, I take it. Yeah, my daughter is right. It is really addicting. You're absolutely correct. I know, but it's not a game for me. It's how I make my money. So my daughter understands. For her to go to those movies, she's going to have to let daddy scalp the markets. After I explain it to her, then she understands. She's got a big birthday party coming up next week with 12 of her friends. It's not cheap. I just did my son's birthday yesterday. It's about five, six, $700 to host it at a bowling alley, to get the arcades, to get the pizza, to get the drinks, to pay for everything. It's a five, six, seven, $800 to host a birthday party now these days. So we're gonna find some trades. Yeah. When your son sees you profit, then they plan a new pair of sneakers. I that's a good thing. But I want to explain this because you're saying, okay, Ron, are you addicted to scalping? Are you addicted? It's not an addiction, right? It's an addiction if you're staring at your phone 24 hours a day, right? It's just like any other addiction. I agree. But with what I do is, guys, I do a top-down analysis, what I just did on the call here, okay? So you see I start with the daily and I place alerts, right? I go down to the hourly and I place alerts. So when I'm placing these alerts here on TradingView, I have the TradingView app on my mobile, right? Right next to my MT4. So when the volume gets to an alert, like wherever I am, okay? I get an alert. It's like getting a notification. That's when I take a look at my phone. I'm not getting alerts and I'm not just staring at my phone the entire time looking for a trade. No, I let the trade come to me and then I take a look, right? And it doesn't mean that I have to take the trade, but if I see the setup, then yes, I do take the trade. So, you know, some of you guys call it an addiction, right? It is an addiction, but I'm not have my phone out with me and just staring at the candles 24 hours a day. I have my phone in my pocket, and then if it reaches, like let's say after the call, 2 hours from now, it hits a certain area, I get a notification. That's when I look at my phone. It doesn't matter where I am. I could be having a conversation with you. I could be at the barber. I could be at the grocery store. I could be at a drive-through. It doesn't matter where I am. I could be sitting on the couch upstairs. And then that's when I look for a high probable trade. So whether you want to call it an addiction or not, that's life of a trader. What do you want me to tell you? You think this is the only time I trade is just this session? No. I literally trade 24 hours around the clock whenever the alert alerts me. I hate getting alerts late when I'm sleeping, you know, like at 4 a.m. when you're sleeping and you get an alert. It's the worst thing because I want to be sleeping, but you get an alert and it's the London setup and it's an amazing setup where you could literally maybe make your daily goal. So you got to make some sacrifices too. You'll learn, guys. You guys want to be traders, right? So you're going to have to learn how to trade the markets, right? You got to find what fits best for your lifestyle. If this is the only time that you can literally trade is right now, you know, then you got to find a trade at this time. And sometimes you're forcing the trade to happen because you only have this window opportunity of trading and it's not giving you the best suitable setup, but you're taking a trade because you have to. I don't trade like that. I give myself a 24-hour window of trading. I let the volume come to me and then I trade. So I'm looking for those high probable setups throughout the day. That's the way how I trade, guys. You know, like when you ask me questions like that, I'm giving you my honest opinion. Whether you think it's an addiction, that's fine. That's how I pay my bills. You don't pay my bills, so I really don't care about your opinion. If you guys were paying my bills, oh, then yeah, I wouldn't be trading. I'd be sitting on the couch with a cigar right now. But that's not how it works. Bills come and you got to get paid. They got to get paid. That's why I tell guys I don't sleep a lot. Some traders don't have a choice. Some people have a choice, right? Some people are working and trading at the same time. Some people are just trading, right? And they have no other source of income. And some of you guys are just learning for fun right now. But when bills got to get paid, food got to get on the table, kids need clothes, you got to grind. That's the true life of a trader. You don't see me sitting on an island. You don't see me showcasing Lamborghinis. You don't see me showcasing lifestyle with you guys because there is no lifestyle. The lifestyle this is the lifestyle. You're watching the charts pretty much the entire day. I know it's not the best for views or for subscribers or to grow a channel because people like to see the materialistic things. People like to see, oh, you're making money, so you got to have nice cars. Oh, you're making money, you got to have a big house. Oh, you're making money, you got to be trading on your mobile with a margarita on the beach. Yeah, but it's not the true. It's not the truth of a trader. It's all bullshit. There might be a couple traders in the world that do that. I could do that too if I wanted to, but I choose not to. I want to be judged on the way how we trade. I want you guys to see that judge us by our trading, judge us by the way we analyze the markets, judge us by how we're here every single day with you guys. I don't want you guys to judge us by materialistic things. There's other traders you can go out there and join their squad because they got a nice car. I don't care. I'm here to really teach about price action, to teach about trading. That's how I want to go down. When you guys mention my name, I want you guys to say he's a good trader, not he's got a nice car. Is there any setup? Not right now. We had the sell setup on Discord right here. It ran a few pips down, but now it's coming right back up. So I'm sure that there was a trade management regarding the trade setup here. If we look at it, so here was where the chart dropped when it came down. It moved 90 pips if you got in early, and there is a little bit of trade management. Start to secure some here. He will probably have a pullback and need another rejection to drop past 40.25. So there was a sell setup and it moved approximately 90 pips. If you got your money and got out, that's fine. If you didn't, things retrace back up. You have to understand that. That's how trading works. If you haven't taken a trade like me, I'm still inside here, and it's moving nowhere. Like it's still in here. It's going up, down, up, down. It broke right there, okay, but didn't really take out the lowest point of the day and drop. It came right back in, and now we're right back in here. So now we got to see, will it break above? Can it turn bullish now? Will it be an impulse break? Will it actually break and close and retest this, and then we're driving a little higher up? Time will tell. I like that, Tulumi. You want to be good at trading so you can teach your girls and have them to be financially free in life and not have to worry about money. That way they can be whatever they want to be. That's the same boat I'm in with my kids, right? I'm not pushing them to be traders. That's the last thing I want to do because I know how hard it is to be a trader. That's the last thing I want to do is put my kids through this. If they have the passion to learn this, which they do, but they'll come up to me when they're ready and say, Dad, can you teach me more about trading? And I'll definitely do that. But I don't want to push this on them because maybe they have other dreams in life, what they want to be. So I support them wholeheartedly. But what I do for now is I do the trading for them. I invest for them. So they have their RESP accounts, that's Retired Education Savings Plan, that I monitor. I trade that money for them. I put them in big stock names. I have covered call options for them where they're earning passive income. They don't even know about it yet. They're still young. But when they go to college or university, that money will be there for them. I don't want them to be stressed out when they're in school that they got to pay for their school or get a part-time job or work full-time in school. I want them to concentrate on school. I want the grades. I'll pay for it. I'll do this, what I have to do. But yeah, I want them to be financially free as well. I want them to have a good life. I don't want them to sit and stare at candles all day. I don't want them to go through this stress. They can do what they want, but I'll be there supporting them. If they ever want to learn about investing, definitely I'll teach them the investing approach. I'll teach them the passive income approach. But to scalp candles like how I do, I don't want them doing that because I know how difficult it is. I know how much stress it is. I know how hard it is, but you never know. Maybe they want to learn about this. So I will be there to teach them, but I don't force them. Guys, that's why basically we trade. I'm not trading for myself here. I trade for my kids, right? So that they have a good future. Same with when my dad came to Canada. My dad came to Canada. He didn't come here for himself. He came here for myself and my sisters to go to university, to get an education so that we could have an easier life than he had. Every parent wants that. Every parent wants for their kids to have an easier life, right? That's why we work hard. That's why some of you guys are working 1, 2 jobs learning how to trade, right? It's not because it's for you, it's more for maybe your kids to pay the bills at home, you know? So we all go through it, guys. I understand it, okay? I'm a parent too. I know how it is. But you got to use proper risk management. Like, you know, as much as we want to force trades, we want to make money, we got to know, we got to wait patiently for a solid setup. Like right now it's breaking, right? That's an impulse break. It's getting rejected. It's going to close in 90 seconds. Will it close above or below here? Will it get rejected back down? Is it building? The hourly candle is building. We're going to get a new hourly candle now in the next 90 seconds. And maybe now we're moving bullish, okay? Because now now when we look at it, when we're analyzing, it did literally now make a double bottom. Okay, there's the double bottom. That did not break the lowest point of the day. So that's now we're breaking the neckline, right? You guys know how a double bottom works. Now we're breaking out. So definitely it could close above. It could just open at 8 a.m. and continue to go up higher. It could pull back right here or back down into somewhere around here and then gain support, and then it's taken off again. Or it could come right back down here and close below, and then we're pushing right back down. Okay. But right now, who has the momentum? It is the buyers right now. It is the buyers. The hourly candle looks like a bullish pin bar now. It was bearish. Remember, it was all the way down here. It was black. And then this leg started it to come right back up. And now we're closing in 20 seconds. So this could be the first bullish candle that closes above this area or not. Okay. I'm just going to zoom in a little more so we can watch this. Okay, so here's the close. It closed right at our hourly line, okay? And then it just opened black and coming down now, okay? So it could be another blue candle, but it's got to be blue, 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 blue to fill up that wick and continue to go higher, okay? So let's just mark that high so far, 4,042 and a quarter. It's trading inside here. Okay, I'm just going to get rid of this SST sell signal for now because it looks like it's invalid now. I'm going to check my spreads now. It's 8 a.m. Just going to check. So I have a 1.0 spread. Normally I like to trade when it's gone down to right now 0.5. Okay. So I'm just looking at right now what we got going on. Okay. So it is bullish coming right back up. So you guys know the job of this candle is to continue to fill that wick and produce a new high. If it doesn't fill that wick, then it could fail and be a lower high and come back down. Maybe we'll wait for this first 5 minute of 8 a.m. to close. Kara, good morning. Welcome. Cousin, if you make it too easy for the kids, won't that spoil the kids, make them lazy? No, I don't tell them. I don't tell them what I do for them. I don't tell them. My kids are number one in school. Like my son is in the honors program. My daughter is, got the grades. I don't tell them anything. I tell them work hard, go to school, study. But I'm building their financial security without them knowing. Yeah, you're right. Because if you tell them, oh, you got a lot of money, yeah, the kids can turn out lazy and not want to go to school and just rely on that. You're absolutely correct. I don't tell them that. I tell them we're poor. I tell them we're broke. So you got to go to school. You got to learn. Dada's losing a lot of money in the markets, I tell them. So you got to get a good job to support me when you guys are older. I use that type of psychology with them. Okay, so it's really strong and bullish. We're getting a nice breakout. Okay, so if it moves up, we could potentially catch a pullback buy somewhere down in here. Okay, unless you're already in a buy, that's fantastic. You're getting the move. If you just bought on that breakout at 7:55 or 8 a.m., that's great. You're in the money. Okay. But now what I'm going to do is analyze how big of a breakout this 8 a.m. volume is. Maybe we'll retrace prior to COMEX or during COMEX. Maybe this is a fake out and we'll come back in. There's a lot of variables, okay? I don't know what to tell you which one could happen. We've got to literally play it out candle by candle. But right now it is bullish, okay? Produce that double bottom. Now we're getting that double bottom. This is the breakout right now. Nice breakout. Like, that's a beautiful candle. If you just look at the opening price, that's almost a 100 pip candle. Like, that's excellent. That's, if you're in a buy, that's exactly what you want. Am I in a, no, I'm not in a trade right now. No, I'm not in a buy. I'm not in a sell. I'm watching. Okay, so see this level right over here? It was resistance for the majority of the entire call we were on until now. It just broke out now. Okay, so that was a red zone right there. And you see we impulsively broke above it at 7:55 and closed right there. Now at 8 a.m., it's filling back up there. So I'm extending that zone into the future and making it green. So if it pulls back, I might be looking for a pullback buy around here at this hourly support and this green zone around 4,038. So in order to get a pullback buy, I got to wait for it to come down into here and then maybe buy it back up. Okay. It might not come down there for a while, right? Because it could just pull back into 50% of this blue candle right there and find support right there at 4,042. Right now, it's still opening bullish ignited, and I know a bullish ignited candle is still strong and could continue to fill that wick and continue to go, okay, without even pulling back. It's a strong hourly candle. Did we get any news right now coming in the markets? Let's take a look. So here, Trump. Breaking news, red at 7:34. This was earlier when we were talking about, thanks to who was it in the Zoom or and YouTube? It was Pablo. Pablo told us at 7:35 right over here. Trump said that Iran has requested a meeting. It will take place tomorrow in Doha. Okay. Is that enough to cause this? Well, if we go back and look at 7:35 when it came, it was just after 7:40. It built on this. So that's the only breaking news I have on Financial Juice. Guys, if you can leave us a like on YouTube and subscribe to the channel, we do appreciate it, guys. It goes a long way. Maybe we can find more traders around the world that are looking to analyze the markets on a daily basis, learning to do a top-down analysis, and maybe join us. So thank you, guys, for hitting the like and subscribing to the channel. Okay, and then when we take a look at the hourly candles now, you see the hourly are still bullish. Remember, we were inside that zone and then now it pushed the hourly candle, 7:55, made that impulse break, closed, and then now we're continuing on the new hour, coming right up to that hourly body, the 9 EMA on the hourly, around 4,047, 48 area. That's where there's a little bit of resistance right now. Okay, and we're about 12 minutes away from COMEX market, and that's when the commodities exchange is going to open up. Okay, so there's our resistance now, 4,048. So with COMEX volume, we could continue get bullish momentum breaking out of here, or we could maybe get a pullback coming down here. Maybe we'll look for a buy down here. We haven't retested this location as of yet. Okay, so just keep that in mind. It is bullish, but we haven't came back down to retest this location. And I personally don't like buying the highest points. Like, I don't like FOMO trading. As much as I want to take a buy, I don't like that style of trading where you just buy the highs and get excited. Because a lot of times when I used to do that, I would buy the high, and that's when it got rejected and would come all the way down. And then I'd be in drawdown, potentially hitting my stop loss, and then it would come down for the retest. So I'm avoiding that, guys. If you guys want to buy up here, that's your own business. I try to avoid FOMO trading as much as possible. There's a time and place where you might have to take it, but if you're always FOMO trading, it's probably not going to end up good for you. In my opinion, the best would be to wait for a pullback, because you got to understand this zone. It's not just me waiting for a pullback here, or maybe you waiting for a pullback here. It could be building a block of orders that are pending in here that want to buy gold, but are waiting for the 8 a.m. confirmation, which now it confirmed. So now there could be orders piling in here. And the market can see when a big block of orders are piling in. So if it sees these orders and it still wants to move bullish, the market maybe wants to come down, pick up all of these bullish orders, and then we'll take it back up. But now it can do it with more volume. It could do it with more orders. Then it could break through resistance points and continue to drive higher, because when you're counter trading, you need that volume to break through resistance points. Because believe it or not, it is a bullish move, but we're still counter trading. If you're in a buy, it's nice, but it's still, you got lower highs here, and lower highs. It's still bearish. You know what I mean? Like, even though if you look at this leg coming down, and then you see where it's producing this double bottom, it's coming up, it could just trade right high into here or here, and then drop right back down, and then come for that pullback right in there. But right now it's still bullish. It's still creating higher highs and higher lows, and opening ignited again. Very strong move. Is it overall bearish still? Yeah, that's what I just said. If you look at the higher time frames, like, this is a bullish move, but it's still counter trading right here, bearish. If you go on the higher time frames, maybe it might be more clear. Like, if you come to the hourly right here, this is a nice hourly volume, but remember, it's just 10 minutes, okay? But if you look at the rest of the hourly candles, they're still bearish. They're still bearish. This is a nice pullback, but it could come back down, right? Unless things close strong, unless this hourly candle can continue to break that high, fill up there, maybe close at 50% there and build, then yeah, maybe we are potentially reversing the trend. But right now, it's still bearish, but strong move. Okay, so at this white line, I'm placing an alert here. Okay, so you see I'm adding an alert at the white line. And this is not just for this session. This could be for the entire day. Let's say we're going to go to this call till 10 a.m. Let's say it doesn't even come back down here till 10 a.m. My alert is still there. Like I said, guys, I walk away from my computer. I might go do a few things, but this can give me an alert at any time of the day it comes down here. And that's where I want to maybe entertain a buy. Whether it comes down here in the next 5 minutes, the next hour, the next 5 hours, that's where I want to be entertaining maybe a buy until it comes down there. I was hoping it would come down right away, but it hasn't, okay? I can't control where gold wants to move. I can't control the markets. I'm not a market maker. I'm just a trader. So I have to wait for the best available opportunities to either buy here at a discounted pullback, or I have to buy the highest point and FOMO trade up there, or I have to consider selling up here, okay? So those are the considerations. icon. You're a little late, sorry, but why the white line? The white line was the resistance we had over here when we like before we started the call. You can see 6 a.m. It didn't break, didn't break, didn't break, didn't break, and then finally it broke. So that was the hourly resistance, and right now with the volume above, it could be hourly support. So that's why I'm waiting to see if it will pull back right there around 4,038 or 39 or 40, and then pick up buyers and either return back up or build itself back up. Maybe grab some liquidity right below it, okay? But that's where I'm entertaining a potential buy opportunity. And we're about 6 minutes away from COMEX market open. So COMEX can return all of this back down, right? That's this purple line is the 200 EMA on the 5 minutes, okay? It's acting as the current resistance right now. So also watch the formation of an ignited bullish candle. So you see how it was bullish ignited and it filled all the way up there, and now it's getting rejected back down. But this is where you got to watch and see if it will refuel itself and hold its bullish open. Sometimes it will refuel itself here and come all the way back up. There it actually flipped bearish. See how it turned black now? So we lost that opening and it closed bearish. So this is where now the red line could turn as the resistance and continue to push this thing down. Right now the blue volume is breaking above it, but remember it's got a big wick to fill. So that candle has to go blue, 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 all the way up that wick, and then maybe potentially get up to that 200 EMA. So as it's coming up bullish right now, it could still get rejected somewhere down this wick and push back down. But right now it's still showing how strong it is. It's showing its strength. It's continuing to fill this wick, but it's not a small wick. That's a rather large wick. So even if the candle is bullish like this, it's coming up, it could get rejected and come back down. Because remember, it's like climbing a mountain. You got to climb this big, big, big mountain, and then there might be someone up there that pushes you down. And then you got to climb it back up again. So that's a big exhausted wick. Okay, see how bullish that candle was? It was blue, 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 but only got up to there and then again got rejected back down. So now we're consolidating right here. And we're about 4 minutes away from COMEX, okay? So you can see that they're starting to establish some sort of resistance right before COMEX market open. So this is where we could get a leg coming down, right? We could either look to buy a pullback right here at the red line or at the better discounted area down in here, which we haven't retested. So now it's turning into a bearish shooting star that could potentially push down further, okay? And then if you see, guys, if you are in buys, when you're approaching like a 200 EMA, you have to understand that that could be the upper resistance if you use indicators. Some of you guys use these indicators, some of you guys don't. Some of you guys just put them on your chart and don't follow them, okay? But it's good to understand you were very close to that 200 EMA, and that's where the big rejection occurred, okay? Now we're pushing down. Okay, so now we got to see where we can build some support, because now I see a pattern. I see it come up right there. That's where we're now the bodies are, the volume are, and now we're coming back down. So will it come right down to here? Will it go back up? Will it be a double top here? Will it come all the way down here, come back up, maybe a lower high here, maybe break, have a new bullish move, could be a double top there, then an M, and you guys see where literally our zones are. The red line and maybe here. Then if it comes down here, will it break and drop down further? All of this to consider. So just like we were trading in this zone, it kind of moved away from there, and now we're trading in this area over here, this zone. Is it just you, or is it making an evening start? No, it is. There's a bullish candle. There's like the star, And if this is like a bearish engulfed candle that engulfs this, yeah, it could be a start of an evening star pattern, and that's considered to be bearish. So if it can hold up, then maybe we're going to push even further down. But yeah, that could be a 3-bar evening star pattern here. If you guys don't know what we're talking about, is there's a bullish bar. There's where it opened and came down and closed right there like a star. And then this one needs to be a black bar coming down. How it came down and was engulfing, if it can engulf this blue bar, that's a start of an evening star 3-bar pattern, which could continue to push down further. So that could be a start of it. That's how they develop. That's good eye. TRBOWC. So we have 1 more minute to go, and the bearish volume is coming back down. No, it's good observation. That's part of price action analysis. That's good. That's great how you picked it up. Will it hold? Will it hold up? We'll see. You got to wait for the bar to close. Okay. But that's technically exactly what we're looking for. No, it's a start. You're learning. That's great. That's how you learn. You recognize it. You follow it. If you've seen it one time, I guarantee you it's going to look the same the second time. So there it is. Now it's coming down with that bearish volume. So it's targeting this wick. We haven't retested 50% of the big bullish candle that started everything at 8 a.m., right? And look at where now the 9 EMA is, right at the center of that bullish candle. So that could be minor support right there at 4,042. That brings it back up during COMEX market open right now in like 5 seconds. If this can't hold, then we're looking for maybe a potential buy opportunity here. But remember, this could be bigger volume now with COMEX. So open bullish ignited right now. So we know it's coming back up, but it could come into 50% of this black candle and maybe get rejected. So it's bullish ignited, opening COMEX market, okay? Coming into 50% of that candle. So far, the sellers are there rejecting it back down. Let's see if it holds. If it's bullish breaks through there, then we're going to come up to reattempt right up here, right? So the 50% is holding up technically so far. So that bullish ignited open is still holding. It's refueling itself, like I said, with that other candle, okay? And it's still holding it. So it's coming right back up to reattempt to break that 50%. By adding more pending orders, by adding more volume. And if we lose this opening balance, like if the sellers reject it back down, we're coming down here and maybe potentially down into here for that retest area. Okay, so you still see the 50% is still technically holding up for the first minute and a little bit of COMEX. Okay, so now it's coming back up. That's that bullish ignited open continuing to refuel itself. So it's still holding that opening balance, continuing to fuel, but having a difficult time breaking the 50% right here. Okay, so there again, it got rejected coming back down. Will it's holding, it's an inverted hammer candle. So you still see how it's still holding that opening balance. It has not broke yet. The candle has not exhausted all that blue volume and turned the candle black. It's still holding. So it's refueling itself again. So it's going to try a third attempt to maybe potentially come back up. So it's showing how strong the opening balance is of COMEX for the first 2 minutes. Okay, now we exhausted it. Now it's a shooting star candle, could continue to push down, right? Now we're testing the 50%, the 9 EMA. So we should find a wick right here. If there's no wick here, then the sellers could come all the way right back down, and then there could be our potential buyback right down in there. That could be the retest from that original breakout that went all the way up there. So that's another thing I say to buyers. If you don't do anything, look at how the market could retrace right back down. That's why I'm against FOMO trading. I hate buying highs, because if you just wait patiently, the market could potentially return back down. Okay, so we found a wick right there at that 9 EMA and 50% of this bullish candle. So now we have a sideways candle, a spin top. where it was originally buyers, sellers pushing it down, now buyers bringing it back up. It's going to close in 2 minutes. So this is representing, again, the first 5 minutes of COMEX. Okay, so now it's really bearish coming back down. Let's see what will happen at the hourly support. Look how the hourly candle now has flipped back down. So we're just holding this little bit of this hourly volume that opened right there at 8 a.m. So you see it moved up 8 a.m., 8:05, 8:10, and then 5 minutes before COMEX, they brought it down, retested there, still pushing down. So there's a opportunity that we're getting maybe to come back down here, but it could be very bearish volume that actually potentially flips, closes below, and continues to drop down further. Okay, so this could be our first attempt for the retest right now. Okay, so we came in and this candle is closing in 1 minute. So I'm going to let the candle close because it's got 50 seconds. It could close below there and push down further. Okay, so that's an example of how you can get a retest, right? See, you didn't have to buy all the way up there. It came all the way down, but this one could be closing bearish below there and have further room to run down. Okay, so we got 20 more seconds going to close. So that's what I say. What goes up can come down just as fast, right? And if you were in a buy and you didn't do anything, you just pissed away 130 pips, right? Where you could have scaled out, locked some in, because things don't just go up forever. Okay, here's the close. Okay, so it bounced off of it. It's black ignited. We got to give the benefit of the doubt that it could continue to push down, but now it's building blue. So do we want to buy here, or should we wait for it to build at least, or do we just go in for the buy? It's now give us a reattempt opportunity. I'm gonna buy. Okay, so it came down, it retested, the candle's blue. I'm in a buy. I want to see, can it continue to fill back up to that red line? Where will I place my stop loss? Okay, so stop loss placement, I could put it all the way below hourly support down in there and give it much more room to breathe. However, I'm just going to place it maybe just right at that 50% of that blue candle right there. So I want to see if it can continue to build at this hourly support and have one leg to continue to come back up. Okay, so I'm in a buy. I waited for the pullback to come all the way down and I'm in, but it's still bearish. Okay, so I got to see now, will it regain some buyers down in here just below this green zone? Will it pick up something down in here while I'm in drawdown? Will it pick up? Or will this black candle close below and further push down? And then I could potentially get stopped out of the market. And then we're moving into 8:30 as well in the next 3.5 minutes. So we're going to get a new 30-minute candle that could change as well with volume, with volatility, with everything. So we're right at that hourly white line, right there around 4,038, 039 area. So this is where the buyers and sellers could be fighting now for direction. Okay, so 2 more minutes to go. It's still a bearish candle. So can the buyers close back above that white line, build off of it, and maybe have a leg coming back up going into 830? Or the sellers can close below here, and then we're going to have some further selling momentum going into 830. So see the candle is like a spin top continuing to fight this location. So buyers and sellers are fighting here. It is picking up some pending buyers, but there's still some selling pressure. So we have this indecision candle building right here. And we're going into a higher time frame at 830. So it could go either direction here, unless we have like a solid candle closing. Country, I'm counter trading. It depends how you look at it. Yeah, counter trading the overall higher time frame, but this move where it came up bullish, I'm trying to buy, see if there's support here holding at the hourly, and to buy it back up to break that and maybe create a new high. But yeah, I am counter trading. You are absolutely correct. So, but this bullish leg that broke out, I'm seeing if it will hold support here, which my stop is right there. If it can't, then direction could be bearish and continue to break for that lowest point of the day. So I want to see if the hourly buyers are here to maybe reverse the trend back up. But yeah, I agree with you. I am countering the move. So I want to see if this is a true bullish move coming through here. And with that candle that closed black, now we're below that white line. So it's still technically bearish unless we can get some blue volume building back above there again. And this is that neckline where it was bearish all morning, bearish, bearish, bearish. We had that 8 a.m. bullish breakout for about 130 pips up. And then now I'm trying to buy the pullback to see if the buyers can hold this position and bring it back up through here. But it's still got lower highs. And you look at the hourly candle, like look at where it's right at the opening price again. So this is where it's going to be a jockeying of position between the buyers and sellers to see who will control this critical area. So if the buyers can continue to ask to trade up here and close it with a new high, it could potentially build its way back up to reattempt to test these upper highs up here and maybe potentially start to slowly reverse the trend bearish to bullish going into 9 a.m. But what I was showing you guys was I was just waiting to buy a pullback. I didn't buy this big bullish move. I waited for it to pull back right there. Okay, that's what I was showcasing. Okay, so we got a good strong bullish candle, but we got a lot of work to do. We still got to close above this high. We got to retest this opening black candle. Can we build? Because sellers could easily offer and push this thing right back down, just like that wick. Okay, so it's got to continue to build and close strong. And we got less than 3 minutes to go in this candle. So this is also opening the new 30-minute candle as well. That opened at 8:30. Sergio, welcome. Good morning. Hope you had a great weekend. Welcome. Happy Monday. Yeah, I'm in an active buy. If you don't feel comfortable buying right now, wait for this body to close. So we got 2 more minutes to go. Is it a change of character on the 15-minute time frame? Potentially. I see more barcoding on the 15, bullish, bearish, bullish. But let's see on the 5s. Okay, we got a nice bullish candle, right? It's in the money, but let's follow into the close. Let's see if we can close back above here, maybe fill that wick. Can we close strong? Can we make this red line our support? But you see, guys, the pullback in the green zone can yield you a nice little scalp, right? Maybe I went in on a candle just too early. Should have waited for the new 30-minute candle, but the woulda, shoulda, couldas. That's why you place yourself a little bit of a stop loss, give it some room to breathe. Don't risk your entire account. But let's see now. We got to follow into the close. I know it's a nice bullish candle. It's nice, but I'm still, look at the hourly. It's still got a big, massive wick, okay? So we still have a lot of work to do because we're still, like Country said, we are counter trading. Absolutely correct. So we got to close with some conviction above bodies and create some highs. Otherwise, sellers could just continue to push this thing down. And now we're going into 30 seconds into the close. Should I pip and dip, Country? I could, but I don't know. When it comes to YouTube, I try to hold trades to educate and hold them, but we'll see. We'll see how everything moves. But yeah, I should be at a break even right now or limiting my risk. Absolutely. But let's see here. Okay, here's the close. So we closed. We didn't engulf that black bar. We still got a high. So if it pulls back, see the red line, which was previous resistance, could be support. Our EMA is 9 EMA is there too if it pulls back. But we got a bullish ignited 5-minute candle. So maybe the momentum is on our side now to continue to fill and come up to maybe reattempt to break that wick. 4,046 would be our next resistance. And maybe we could come back up to the double top position right up here. That's the double top. Okay. So let me measure the move so everyone knows what's going on so far. Okay, that's about a 50 pip move right now. Okay, 50, 50, not 15, 50. So you're more than welcome to go to a break even because we are still technically counter trading the market. So you're welcome to reduce your risk. Like take your stop loss and maybe go, I'm going to go to a break even now. So I have no risk while I'm up 50, maybe potentially 60 pips in profit if it can break this high up here, okay? And then if it can get right up to the red zone, it's about 75 pips and we're coming right back up to the double top. That's when you can start to secure a little bit if you like, because it could easily come right up there and go back down. However, we could break and build, right? But when you're up 50, 60, 70 pips, like it is on your way to grabbing some profit. I'm at a break even now. So I realized this much of drawdown, right? But now it's right back in the money. And now I don't want to come back into drawdown because now I'm in the money, right? So how much drawdown did I realize when I took the buy down there? About 30 pips of drawdown. And now I'm in the money right now, 60, 70 pips. So I'm now at a break even. I don't want to come all the way back down and put me in drawdown, nor should you guys. When we already suffered a little bit of drawdown, now we're in the money. So let's not go back and draw down. Worst case scenario, if it comes down, it's a break even. No big deal. We'll learn from it and we'll move forward. But we got to understand how we're moving right now, okay? So it came down. Remember, I didn't buy that big bullish breakout. I said, let's wait for a pullback. It pulled back right there at the zone. We took the buy out of there. Now we're got to come up and we got to test the red zone. Yes, we could potentially break out. That would be fantastic. But we also have to recognize that's where they pinned it down and they sold it down. So it could definitely come up here and then go back down with this leg coming down. And then the only thing that can save us is where this bullish candle opened, the ignited price, the opening price. Okay, and produce a higher low at 4,043 to see if we can continue to build and break out of here. Okay, so please, guys, manage the trade. Okay, everyone trades different, but you should be managing your profit at least. My job is to try and manage the risk with us. I can't tell you when to secure profit. That's up to you. Okay, So it was bullish, 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 but you see right below that red zone, sellers are there rejecting it back down. So we have this inverted hammer candle that needs to continue to refuel itself and build up. Remember, it was that ignited open, okay? So I don't want to lose this bullish ignited open. So I want it to continue to refuel itself and try and come back up and test these highs. Because if we lose this, it's going to flip black and then potentially come back down to where I had the original red line right there, where it was the resistance and could be support. But then that's where I'm at a break even. Okay, so let's see if it can continue to hold this bullish ignited open and continue to refuel itself. That would be really rewarding if it can continue to refuel itself, break the high, then it can turn easily into an 80, 90, 100 pip move back up in the red zone. If it closes strong in the red zone, we could potentially break out of there. And then maybe this could be the start of a potential reversal in the market. But you see how nasty the sellers are? They're still rejecting that strong candle. So it's got to continue to rebuild itself. So that's why as a scalper, guys, I know I didn't do in this situation. I like to close out 80% of my trade when it goes up 50, 60, 70 pips in profit. I like to take majority of my trade out of the market and just leave maybe 20% holding with a break even. I didn't do it in this situation. I would just move my stop loss to break even, and this trade could come down and hit me out there. And then I got to journal it and say to myself, why the hell did I not secure some money, right? Okay, so here's the close. We still have an inverted hammer candle, so we could still open ignited bullish on this bar. Okay, there it is. It's blue, blue ignited. So it's got a job to do. Can we keep the blue ignited open and continue to fill that wick and drive? Or are we going to lose this opening price and then we have to come back and use this red line as support? So that was the bullish ignited open on this bar. It's still technically holding. Okay, can we continue to build, break that high? And then we could be testing right at that red line. Okay, so it came back up, did not break, lower high, coming back down, refueling itself, ignited body. Still, can it continue to fill? You can see the upper resistance, it's there. The sellers are there holding it down. If we can break through here, it might be a really, really nice short squeeze. But there, we just lost our opening balance. So you see how we lost that opening strong bullish ignited open? Just flipped black now. So now it's a shooting star candle coming down to retest either that previous bullish candle or the 9 EMA if you're using it. More so right here. That wick, which was resistance, could be the support. So it's just above my break even. Unfortunately, if this black candle comes all the way down there, I get tapped out at break even, okay? And then I got to go back and review this trade. And country, I got to say to myself, why the hell did I not secure any money on that leg going back up, right? I'll verbally let you guys know as soon as I get taken out at break even, okay? So we have a wick there forming. There's a little bit of support at 4,042. I hope it can hold support here because I don't want to get taken out. Okay, there is a wick there. We got a little bit of a bounce, but that selling pressure is strong and keeps coming down. I would love if this red line, 4,042, could build some support here, just right above my entry. But you see, guys, how a resistance wick can turn to a supporting wick, right? Okay, it's still technically holding. We still have a wick there, but it's still got that black body. We got to flip that black body back up. It's tough to flip this candle. A lot of selling pressure. And we're moving into a new 15-minute candle at 8:45 in the next 90 seconds. So let's see if we can build a little bit of support off that wick and technically consolidate here or potentially flip this candle. Man, but there's so much selling pressure on it. So they're creating a lower high second top. I'm still in it. I'm still holding it. There's still a wick there. I'm still live, but it's got a high probability I'm going to get taken out at break even. But good flip, man. Hopefully the Forex gods are out here looking out for us and we can flip this body and drive. Maybe we get rewarded with a 100 pip move here. Okay, now we're bringing it back up. So you got that bearish spin top candle. Can we flip it blue? Look at the retest, guys. Look how technical that retest was. Okay, look at the wick right there. Look at the 825 high. There's the bullish candle that closed above at 830, and look at the retest. A wick high turned to a wick support, guys. That's how technical price action can be. I'm telling you guys, when you understand and you study candlesticks, you can take precise entries and learn where to put stop losses and TPs and things like that. So that's why I love price action. Price action is a true real live indicator that no type of EMA, no type of MACD or RSI can even compare to, okay? Like, look at that. That retest was perfect, okay? So we brought the volume back up to the opening balance. We didn't close it blue. It closed black, technically. But we're opening up another strong 15-minute candle now with blue volume. So let's continue to see. We're live. I'm still live. Let's see if I can continue to fill these wicks and trade into the red zone. And then that would turn into 80 plus pips. And then to break that high right there, that wick would be 90 plus. And then we're trading right up that wick up to the 200 EMA. Maybe we close with blue volume above here. We might flip that zone green and build and continue to maybe reverse trend here. And I'm still in a counter trade, like, you know what I mean? So we still have to respect that there's a lot of sellers up here, but you see that nasty rejection, okay? So you see how they're putting, look, we cannot break that. So it's coming up, rejected, coming back up, rejected. We came back up strong here on a new 15-minute bar, ignited. So this is technically when we should have broke that. And the sellers are still there active, pushing it right back down. So this is tough to break. Holy shit. Okay, so we got 3 wicks. Now the candle can turn black and come back down. So we got to see now. This is going to be the big fight right here between the buyers and sellers starting at this 15-minute time frame. Holy. Tough price action on gold this morning. Very, very, very difficult. So like I got everything I wanted out of that candle, that nice rejection came back, got everything I wanted out of that next bar, bullish ignited coming back up, but it just failed to do its job, to just clear that high. And then the sellers stepped in and pushed it right back down. So you see where we're consolidating now. Now it's just flagging right in here. Again, the buyers are bringing it right back up. So let's see if we can move it through here. We're at a critical area of the hourly candle as well. And this is the double top on the 5 minutes. So we're at a serious area where we could actually, if the buyers asked to trade up here, we could squeeze our way out of here, but the sellers are here protecting the position. So I could even bring this red box right down to there to show you exactly where the big block is of sellers. It's teasing us. I know it is. Yeah, it's teasing us, but this is trading. Guys, leave us a like and subscribe to the channel. We have almost 1,000 viewers. Thank you, guys. If you do like a live analysis, live trading, join us daily. Just subscribe to the channel. You can join the team at Stock Sniper Trading and join Dave in the Zooms. Be part of the 24-hour Discord. Trade with all the snipers in there. Share your charts, analysis, learn and earn with the team. Get all the indicators, all of the education on the website, the trade ideas and signals. and much, much more that we offer here. Which indicators are worthy to put on a chart for gold? Just the standard ones. I'm using a 200 EMA, this purple line up here. I'm using a standard 9 EMA, this green line right here. If you want to use RSI indicator, you can use that too. MACD is a popular one. If you want any sort of volume profile, if you want a volume profile bars or volume profile showing your nodes, your high volume nodes, low volume nodes, or your point of control, you can add that on your chart. I'm more of a trader that just follows technical price action. I do a top-down analysis and follow my points of interest and my zones on higher time frames. But you can see I complement my charts with some EMAs, just the standard ones, 9 and 200. You can add a 50 in there as well. Okay, guys, again, I will verbally let you guys know when I get tapped out at the break even. So again, buyers are failing to ask to trade up there. Why? Because there's probably more sellers, right? You know, there's more offers. We're trying to break a double top. We're trying to counter trade an overall bearish move. We thought this bottom could build, but you see the second top is holding, okay? So that's why I have a break even and I have no longer stop loss, because let's just play it out. It comes up there, right back down there. We came up, we tried. You see, we technically tried to break there and have failed so far. So if it comes back down black, yes, I do get tapped out at break even. But what I'm preventing myself is if it closes below there, we could lose that hourly support, right? There's your M pattern, bigger M pattern. And then it comes back there. And then sellers are in full control, clearing out this zone and coming to the lowest point of the day. So I don't want to be part of that, okay? We have another solid bullish ignited candle opening. So hopefully this is the one that can break right through here. We're still flagging bullish. I'm still in the money, still above my entry point. So this 5-minute bullish ignited bar, oh shit, if we can't break these wicks, they're low wicks. Like we don't have a huge wick to break. So technically we should break out of this. But I can't move the markets. I wish I could, but I'm not a market maker, because if I would clear the pending orders out of here. That's what I would do. If I was a market maker, oh shit, I would spike the shit out of this. Because I know the sellers, their stop losses are above this wick and above this 200 EMA. So what I would do if I was a market maker, I would clear this entire zone, fill that wick, clear the zone, take out all those orders, pull back into here, and then drive this shit. That's what I would do. But I'm not a market maker. but that's what I would do. Oh man, it still can't break that. Oh my God. This is literally teasing us. Holy. And you can imagine, if we lose this body of volume, then the bearish black candles are going to start to come in, okay? So this could be like our last attempt going into almost 9 a.m. where we need to break this. Otherwise, sellers will step in and see that the buyers are weak. They can't break this. More offers will come in, and then higher time frame sellers at 9 a.m. will start the black leg coming back down. Yep, you're welcome to take some profit up there. If you believe it's the last attempt, you could. Or you could be stubborn like me and continue to hold this. Maybe it's just me being stubborn. So it's refueling itself, picked up more pending orders, picking up volume in order to just break that high of a wick, okay? Man, come on, reward us for holding this. It's not easy to counter trade a move. And also when you're up 80 pips in profit, where I just want to break to get to that 100. 100 pips looks better on your profit loss than just 70 or 80. But this is me playing very stupid with my money here. Or just being greedy or stubborn, you name it. I'm all of the above, all of those things. Is he stubborn? Yes. Is he being greedy? Yes. Is he being Is he being stupid? Yes. But one thing that I do is my risk is managed. I can't lose any capital. Worst case scenario is it's a break even. I'm okay with that. As long as you guys are learning on the call as well. Learn to do what I'm not doing. Oh, wow. Another minute and 20. We just need to clear 4,046, get it to 47. Come on. Whoo, wow. Get it. Okay, we broke for a high. Okay, we broke. Now can we squeeze through here a little bit? Okay. So we at least have a higher high. Okay, I'm happy. We got a higher high. Now we got to watch the volume precede this and build off of this. And we're closing in 20 seconds. So how much of this blue volume can we retain into the close? That's the big question. Oh man, that's a nasty rejection. Oh shit. Okay, so with that rejection, the next candle has a high probability of opening black ignited and coming down. Okay, with that rejection, here's the opening. We still don't have a color yet. What is it? Just sitting there. Black. Okay, so it could be black, 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 and come down. We lose this. And man, that was a nasty rejection. So can it continue to build in here? And we're moving sideways. Like if you were to consolidate the volume here, we're in this range right here. It's not a big range, but this is where we've been consolidating for 5, 10, 15, 20, almost 30 minutes right here. Almost 30 minutes. And we're going into 9 a.m. in 4 more minutes. Oh my goodness. And then guys, right just after 9 a.m., we're going to do a top-down analysis on US30 and get ready for Wall Street, regardless what happens here. Okay, we've got another higher low holding. Can we break again? Can we, if we don't get the fill of the wick, can we at least close with blue volume above this zone? You know, even if we close with a little bit of blue volume above here, you know, we're still in this bull flag. We could create some type of bullish momentum going into 9 a.m. and then really break through here. So, but the buyers are having a lot of difficulty. Here's a rejection. Here's a rejection. Here's a rejection. That one we created that higher high, but then they rejected it back down. So, you know, there's 4 big wicks here. Okay, it's not easy. We got an uphill battle to continue to build here. So easily for sellers to come back down. Again, I'll verbally let you guys know as soon as I get tapped out at the break even down there. Tough volume. We're sideways right now. You can see both sides are accumulating, buyers and sellers. If we're to go with the higher time frame, it's bearish, but in order to reverse a trend, we got to build. We got to continue to build, 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 which buyers are doing, but they're not closing strong with conviction. It's tempting to buy. I would wait. I would wait. I wouldn't buy right now. I would wait minimum to go into 9 a.m. If you're waiting to buy, look to see if we can come through here as buyers and close above here. Then maybe we can flip this red zone green. And again, you can do what we did, where you could wait for a pullback into it and buy off of it. But right now, if you're buying in here, it's like a coin flip, right? And you can see what I'm going through holding this buy. So I would hold off on a buy right now. Like if you're saying if you want to buy right now, I would wait. Welcome to the world of trading gold, where this security can be nasty like this. Can you buy right now? I just said, did you not just, hey guys, you got to pay attention, okay? If I keep repeating myself, saying the same stuff, I'm not even going to repeat myself because I just said it, okay? Please listen. Do what you want, actually. I'll tell you, do what you want because you're not even listening to me. So just do whatever you guys want. What's the point of me talking if you're not even listening? Just do whatever you want. Just use proper risk management. That's all I can say. Okay, okay. What do we got going on here? What do we got going on here going into 9 a.m.? What do we got going on here? What do we got going on here? What exactly do we got going on here? Okay, we're almost at 100 pips. What do we got going on over here, Tammy? Holy shit. Oh, wow. What do we got going over here at 9 a.m.? Okay, I'm going to scale out 80% up there because that's at 100 pips. I'm not going to fool around there. Okay, we got lucky on this nice bullish candle. I saved my break even, so I took out 80% there. Okay, so 80% of my trade is out. So I only have 20% remaining with a break even. Okay, I got lucky. I'm going to tell you that candle that came down, I got lucky. That wick, I got lucky. That wick, I got lucky. The close, we got lucky. And the bullish ignited open at 9 a.m. got lucky. Okay, great. But I'm not going to now piss away 100 pips. So when it came through the red zone, I secured 80%. Now I got 20% remaining. Okay, now we got to follow this body of this candle to see where it could close. Is it going to close above that red zone? That was that double top that we're squeezing through. We still have to fill that wick right there. That was the 810 wick, and there's our 200 EMA. So that's almost 110 pips. That was a bullish flag. Yeah, inside the, like it got, but look, it got rejected, and then it came down. But look, we built higher lows. That wick saved us right there. So guys, if you want some analysis, that 825 high became our 840 support holding. So again, that's that was right above my entry. Okay, so that wick saved me to get the 100 pips of profit. Now, I'm not being greedy, right? That's now reaching a target. Do I want more? Absolutely. Do I want this trade to turn into 150, 200, 300 pips? Who doesn't? But I'm not going to be silly now, going up 100 pips and not take out anything after holding through that entire range, okay? Look at now, big nasty rejection, okay? So let me recap because a lot of you guys are not listening. I've taken out 80% of my trade up here, above 100 pips. I only have 20% remaining at a break even, okay? Because someone's going to ask, again, thinking I have a stop loss, thinking I didn't take out money. I'm telling you guys exactly, verbally, what I just did, okay? You can do whatever you want, but I had to do what I needed to do. I got stubborn to hold it to 100 pips. And when it hit there, I'm taking my money out. Do I want more? Absolutely. Who doesn't? I want this to go 200, 300 pips. But I'm not stupid, okay? 100 pips is 100 pips. I still see we got a 200 EMA. I still see we got a wick. I still see we're trading in the red block. I still understand we're counter trading. Like you got to pip and dip. Because this could reverse. This could be just a nasty rejection coming at 9, and then they reverse this shit back down. Okay, so after this body closes, I'm going to do a top-down analysis on US30 because we got to get ourselves ready for Wall Street. Hit the likes, guys. Hit the subscribe button if you learned from the trade. I'm not asking you if you took it. I'm not asking you if you profited. I'm not asking that. I'm just saying, did you learn anything from that trade? Did you learn about the entry? Did you see how I waited for the pullback to come back down into here? Did you see where originally I placed my stop loss? Could my entry have been better? Absolutely. I could have waited for the next candle. That's trading. It could always be critiquing yourself, waiting for the next candle. I understand. But that's why when you take a trade, you got to also know risk management where to place. So as it was going up, guys, you know, I still held, could have came back down and tapped me out. I understand. But when it started to move up 60 pips, I took my stop loss to break even. That was to reduce all risk. And this bullish flag pattern worked out, and 9 a.m. we got all of the volume. Is there news at 9 a.m.? I have no idea what could be causing this, or is it just the 9 a.m. volume? Sorry, guys. Okay, so did it close now? Look at that red zone. Did it close above the red zone? Yes, it did. So go quickly red to green, because if it comes back down into this, it could technically be now a pending buyer zone to continue to take us to break these highs. And let's just see what we got going on above us. So we have the bigger red zone up there. We've got, look at this level of support right now that we're having a difficult time breaking right there. There's a body, a wick. There's that wick, 200 EMA in here. So our next breaking point would be 4,053 on gold, okay? And we're still technically counter trading. But right now we're building a little bit of uptrend. Okay, you can see the double bottom is what produced all of this. The double bottom, there's our bullish leg. Again, I didn't buy that FOMO leg. I verbally told you guys that there could be a pullback, and there it was. I bought the pullback right back down in there. So we've got this leg continuing to come up. We got to continue to fill that wick, create a new high, maybe get up to there, bounce back here, make this support or this green zone still holding, and then maybe we can get up to there. So put all these into the future. We've got our static lines, and that's what we could be looking to continue on this buying trend, but we also are counter trading. So we got to continue to fill that wick right there and close. Right now, it's got these equal highs right now and coming back down, retesting this green zone that we just flipped now due to that candle, okay? So I'll continue to monitor this trade. I still am invested. I still have 20% in at the break even, but I'm going to move off of this chart and I'm going to do Dow for us quickly. I'm going to do a top down because it's almost 10 after 9. So if you guys can please manage this trade on your own, I would appreciate that, because I'm going to do now the Dow. Okay. So we're going to look at Dow top down. This is how it's trading on the 5 minutes. Okay, nice. But I'm more concerned of what's going on the higher time frames. Okay, so this is the Dow. Do we see a zone, obvious zone? There was the previous all-time high right there. So I'm stretching it into the future. There's, again, if Dow pulls back all the way down in there, that could be a great buying opportunity. It's not there, but what I do is place an alert either at the top, mid, or bottom. I use yellow for daily. There it is. I can add an alert. It's nowhere near there, but maybe next week I'm at a grocery store and it comes down and gives me an alert and comes all the way down there. And then I watch the 5-minute candles, see what it builds. Maybe I'll get a nice little 100, 200 pip scalp buy out of there. Who knows? It's nowhere near here, so I don't need to entertain it. Now, let's continue. Was last week Did it create a new all-time high up there? Yes, it did. What day? It was Thursday of last week. We hit an all-time high of Dow. There it is. 52,725. What's been going on since then? We got rejected. Is there bodies of volume right around here? Is there some sort of interest point? Let's look. This is where we previously came up, and right there. There's where body closed, body opened. Yellow. And now let's see. When we broke the all-time high, we came up there, we closed above it, then the Friday we came back down. Look at today, it's bullish ignited, coming right back up. So if we close back with nice bullish daily volume, we could in fact continue to backfill that all-time high wick and create a new all-time high. But we got a rejection and a rejection. It could be like these 5-minute candles. If they reject this and we come back down, then we could be selling down. Remember, it's NFP week on Thursday, okay? So right now we're just trading sideways, bullish, bearish, bullish, okay? So do we have some other areas of support? Right here. Make sure you mark this zone. There's a body, and a wick right there, okay? This 51,435. So I'm adding alerts at each one of these yellow lines. If it comes back down here, I'm entertaining a trade, okay? So let's follow Friday. Friday, we opened right here. It came back up. You see, we didn't fill the all-time high wick. It came back down, bearish all the way down there, created a higher low, came and closed right there. So let's find our closing on Friday and our opening price right here, okay? So we have a tiny wick. It's not a bullish ignited candle. You can see when we opened, there was a tiny wick. Okay, that's our lowest point of day. It's basically right at our opening is our lowest point of day. So I'm going to make it purple. Okay, and then to show that it's bullish, coming up, bullish, 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 up to here. Here's our highest point so far, and we're about 20 minutes away from Wall Street. So that's Friday's high, fresh in the market, that we could continue to fill up these wicks a little bit. But then you see the big all-time high wick is right here, but then I have a wick and a wick right in this equal location. So let's highlight these two wicks right here with a yellow line, okay? Right here. I want to touch this wick and this wick, because if it fills up blue, 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 it could get rejected there and not have enough momentum to backfill that big exhausted all-time high wick. But right there and there, okay? So this 52,280 or 300 level could be our main resistance, this yellow line, okay? Now, how are we trading? Blue, blue, black, and blue. We're consolidating in here. That could break out just like that 5-minute candle did on gold, that big breakout candle. Same thing we could see here, okay? So it is obviously building off the bottoms, and it's strong today. Let's go more into the hourly. Let's see, where did all of this bullish volume come in, okay? So there's where we hit the all-time high. It was Thursday at 10 a.m., drove up, there it was, came back down. See, the next hourly candle couldn't fill that all-time high wick, came back down, closed around 50%, next came up, pushed down, and look how it came all the way back down. So this is how we're building back up. It started when? 6 p.m. That's when the daily candle opened. There it is, the bullish hourly candle. We consolidated 7 p.m. There's futures 8 p.m., 9, 10, 11, midnight. There's 1 a.m. barcoding, 2 a.m. pre-London, back down black. 3 a.m. London market open, back up blue. Then we were just barcoding blue, black, blue, black. And then it started to open up now, 6 a.m. pre-London. And now here we're getting some candles that were bearish coming down, coming back up, closing strong. Again, the previous hour, 8 a.m. was bearish, 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 came back up bullish. And now we're opening up here, 9 a.m., where it's continuing to be bullish. So look, do we have an hourly candle closing above here? Like, you can bring it down to those bodies right there, but I want to keep it at the highest point of day. So I have a wick, a wick, a wick, and a wick. So there's a lot of hourly resistance right up here, okay? Can we close with Wall Street above there? Maybe make this support, then we can drive up to that yellow line. Maybe potentially then you come back up and dissect those hourly candles right below the all-time high, okay? So it is technically pushing up. On the 5 minutes, when we look at Dow, we're going to watch this going into the Wall Street open. Right now, it's still holding the daily position. There's a nice little double bottom off that daily point of interest. Came up to the highest point of the day, back down, creating. So 5 minutes, we got a little bit higher low support right in here. There's bodies, bodies, bodies still holding. There was a little wick break or like a liquidity grab, came back and closed above and continue to push up. So we got a high probability that we could maybe fill up to that yellow line with Wall Street volume, okay? We don't have much holding behind. Here was an impulse, and there was an impulse right there. The biggest thing that our resistance is right there, the 82, okay, which could continue to break that, okay. So right now, Dow is strong. It's bullish. Let's see how it opens going into Wall Street in the next 15 minutes, right? We'll continue to monitor this. This is where if you want to add those indicators I was talking about, you add a 9 EMA. We're above the 9 EMA. 200, we're above the 200. And then when we add the hourly bar, you can take a look at what the hourly bar is doing. Oh, man. The screen just froze again. Shit.